This is your LMAX Exchange technical update for Wednesday, November 22nd, 2017. Euro dollar. So the euro is showing signs of rolling back over after the market was unsuccessful in its attempt to take out what was that right shoulder of a head and shoulders top at 118.80. That's the high going back to the 12th of October. That leaves the potential for another downside break over the coming sessions, and the market could set out back towards critical support right now on a short-term basis at 115.55. That's the low that we had seen going back to the 7th of November. Of course, right now it's still choppy out there, and a break below 115.55 or back above 118.80 would be required for that next directional insight. Anything in between, we could continue to see choppy price action. If we break back below 115.55, it will open the door for a downside extension towards that pattern objective on this head and shoulders top towards the 112.30 area. If, on the other hand, the market is unsuccessful in its break lower and starts to trade back up above 118.80, it will negate this head and shoulders top formation and suggest that the market is ready to resume the uptrend in 2017. But overall, anything between 115.55 and 118.80 at this point is classified as some choppy, neutral price action. Sterling dollar. So cable trading up over the past several sessions, but doing so very slowly and also doing so within a still very well-defined range since early October. 130.25, 133.40 are the key levels the market needs to establish below or above one of them on a close basis for a clearer short-term directional insight. But again, overall here with the uptrend in 2017 quite prevalent, the market is favored, even if it does break down short-term below 30.27, to be very well supported around the 127.75 breakout area from earlier this year back in April that set up the possibility for a longer-term base, and opening the door for the next major upside extension through the 2017 high at 136.60 and up towards 140. So short term, possibly we could see a break of the range to the downside, but we do need to see a break of this range. More medium-term setbacks should be limited, and the greater risk, given the uptrend that we're seeing in 2017 and the possibility for a longer-term base off the 2016 plus 30-year low in October, is for significant upside over the medium to longer term. Dollar yen. So dollar yen has been trading within a range over the past several months, really for most of 2017. Range high defined in the 114 to 115 area. Range low down around the 107 to 108 area. Key support in this market comes in at 111.65, and it will be interesting to see if the market can establish a daily close below that level. If it can close below 111.65, it will strengthen the prospect for a full resumption of that range trade all the way back down towards the 107 to 108 area. That 2017 low comes in at 107.32 from back on the 8th of September. If, on the other hand, the market is unsuccessful breaking down, well, we could see some more consolidation here. Ultimately, the market would need to establish back above recent highs that were seen in November, up at around 114.73, to officially delay or negate the bearish or the range outlook for dollar yen. Euro Swiss. Euro Swiss continues to trade in a constructive tone. The market continues to look higher after breaking some key resistance in 2017. Above 110 and then 112. Market most recently trading up to a 2017 high above 117. And the focus now is on a retest of that major support barrier that had been supporting the market up until January of 2015 at 120. Setbacks here, if we do see, should be very well supported, ideally in the 114 area, but only back above, below 112 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie dollar has been in a clear downtrend since topping out by plus 2-year highs back in September at 81.26. The market has most recently traded down into the 75s and could be starting to look to form some form of a short-term base after seeing daily studies, technical studies looking a little bit extended here, although not too extended. But ultimately, right now, the pressure is clearly on the downside. If we do see a rally, it's viewed as corrective, and the rally should ideally be well capped ahead of 78 in favor of a lower top and continuation of declines. Only back above 79 would compromise this outlook. Dollar CAD. So dollar CAD is in the process of recovering out from those plus 2-year lows at 120.62 back in September. The recovery looks to be well on its way to continuing and extending gains. Next upside extension confirmed on a clear break above 29.17, the recent high, exposing a move up towards a measured move objective, which would come in roughly in the 132 to 133 area. Only back below 124 here would negate this recovery outlook for dollar CAD. Kiwi dollar. New Zealand dollar recently trading down to a fresh 2017 low. Market trading down just under 68. It does leave the door open for a drop towards next key support here, which goes back to 2016, May of 2016, when we saw a low at 66.76. The market is on a daily basis. This is the weekly chart. The daily basis a little bit stretched, so there is room for a bit of a bounce, but ultimately here the market should be well capped into rallies, ideally here ahead of 71 in favor of a continuation of declines. SPX 500. The S&P 500, no change to the picture. We saw a bit of a consolidation, a tiny consolidation over the past several sessions, but the market wants to continue to push to record highs and is expected now to look to establish above 2,600. The market would need to, at a minimum, take out 2544, 2543, 2544, the low going back to the 25th of October to take the immediate pressure off the top side. Until then, continue to expect a record run in this market, which has shown no signs of relenting on a medium to longer term basis, despite some severely extended studies. Gold. So gold, for the most part, continues to be a market that has seen some sharp setbacks in recent months, but always supported and looking mostly constructive for higher lows and higher highs, and most recently a high, 2017 high at 13.57 in September. And so any setbacks here ideally supported in the 1250 area in favor of the next major upside extension towards and through the 2016 peak at 1375 further up. Only back below 1200 here would compromise the constructive outlook for gold.